What has stood out to you so far?
I mean, there's a lot of lines that are still crossing on the analyst conference call that is happening after their final results. Again, these numbers that we got earlier this morning essentially confirming what we got in the preliminary numbers on January 6th, but there's a lot more breakdown of the divisional performance or lack thereof performance because chip production really weighing things down.
Yeah.
The over inventories, of course, of their clients and the like, we've all seen it reflected in the memory chip prices, obviously steeper than expected by the industry, and Samsung is the world's biggest memory chip maker. They're the bellwether. Everyone gets the guidance from them. Their latest line saying Samsung is not going to give annual guidance for DRAM or NAND 2023 bit growth. Obviously, we're not sure of CapEx cuts. They've been adamant they're not going to do CapEx cuts or supply cuts because we know necessarily what that would do to the industry. Even though that we've seen Micron, SK Hynix, Kyosia of Japan, they've all already announced that they are going to cut spending on new plants, equipment / output and the like. Kyosia of Japan will cut output by some 30%. Samsung not mentioning that they're going to do any CapEx cuts or supply cuts at this point. Let me just break down some of the key conference call highlights. 2023 CapEx is not yet finalized, Dave. To continue to invest in medium to long-term demand, so of course there's going to be short-term pain. Decline in demand is steepening across the overall industry. Of course, Samsung is a diversified conglomerate. They have three main divisions. Obviously, chip production, the foundry is their largest. They got absolutely wiped out as far as their operating profit, down more than 90% year over year. Also, of course, the mobile division, demand especially sluggish in China in the fourth quarter. And again, because people are not necessarily around the world buying, and there's been lots of inventory built up through the pandemic because there was increased demand. This inventory still need to be worked off by their clients, by their customers, excuse me, and OLED screens, those inventories piling up as well, those sales down.
Very quickly, 15 seconds or so, was there anything good from these earnings?
Well, I think they're seeing a recovery perhaps in the second half of 2023. Okay. Is that good news? That essentially means there's going to be 6 months or thereabouts or another 4 or 5 months of inventory work off and pain in the industry before we start seeing a recovery.